It's time now for charting futures, and let's check in with Abigail Doolittle. And Abigail, you're starting with a cross-asset check.
Indeed, Scarlett, because today there's some mixed messages. We do, of course, have stocks higher, the Nasdaq making another all-time high. But when we take a look at various futures, we're going to see again those mixed messages. There's the S&P 500 active future up 0.4%. Bonds, however, are higher too. So typically, in theory, you shouldn't have bonds and stocks higher. It tells you that there's some hedging perhaps going on, and gold is higher. And then take a look at the dollar yen. It's down. It tells you the Haven yen is down. So we actually have more Haven assets on this board that are higher than the S&P 500 futures. Other indexes are higher. But again, investors trying to figure out the macro picture around the coronavirus before really making big directional bets. One bet, though, that could happen in the future, we've looked at this chart before. This is the yen future. So this is the price of the yen over the last several years. We see a nice uptrend forming within this channel back in 2016 when there was a period of risk off, a bit of a correction, and with the Brexit, we see that there was a big bid for the yen, that Haven asset. Right now, hanging on to that trend line, the RSI appears to be poised for a move higher. All of this could suggest that the yen futures may pop up to at least 100 in price. If that happens, that would probably signal some serious risk off in the future if that Haven was bid up more. To talk more about this, I'd like to bring in Vincent Cignarella of Bloomberg, and of course a former FX trader. And speaking of FX, I'd love to know what your view of that is. And of course, we also have your Euro future.
Sure.
chart.
And the way things are playing out with the virus, that's looking like the way things are going to go.
Yeah, like
in terms of
the yen will
risk.
rally.
And part of that risk strategy is for potentially a higher dollar outside of the yen and potentially a lower euro. The fundamentals as well as the technicals are really lining up against the currency. We've had bad industrial production numbers, and those for December don't even take into account what the virus situation is. And
we already see this breakdown.
We already see it's a technical breakdown. Breaking down in the cash market below 109.30 today. Folks are looking at 108.80 as support. I personally don't see it. If you price this up on OVML with Bloomberg, you can price a 35-day put option, just a nice simple put option.
And that's one way to play futures, to have less money on the table, take a little bit of the risk.
And this particular strategy has a 50-point break even. So if you did it at the 125,000 contract, that's 600 and change.
And we do have bullets that match what you're talking about.
And if you do it as a €1 million contract, it's just under 5,000 for 8 lots, 35-day expiration. You're gonna hit that 108.80 support level, which is basically going to be your break-even level, and then you can just play it from there if you believe it, and you like the euro dollar lower and the dollar higher throughout this virus situation.
One way to play it right here.
One way to play it as it puts stress on the European economies.